Good afternoon, ladies and gentlemen. Welcome back to the 9th of December weekly market review. We just had the big non-farm payroll data last Friday from the US, and it seems like it's a good news over there. And today I have with me Mr. Gerald Wong, who will go through with us some of these economic developments. Hi, Gerald. How are you?
Good, good. Hi, Sunny. I guess now that we're in December, I hear more of the Christmas music in the shopping malls. We're discussing our year-end break earlier as well. So I think that's definitely something to look forward to.
Yes, that is something to look forward to. The market as well. The rally does not seem to stop. We are into uncharted territory, not only on the equity side, on the stock side, on the cryptocurrency side. Bitcoin went back up against above 100,000 again, and Ethereum hit the 4,000 level again. I think a lot of these developments is really keeping investors on our toes to see how much further this rally can run. So I think there are also some developments on the Singapore side, and you will cover that for us today, right?
That's right, yes. So as usual, before we start, the usual disclaimer that today's sharing is for information purposes only and should not be taken to be financial advice. Okay, we have one last Ask SIAS that is coming up this Wednesday. That will be for last Ask SIAS for this year, to be clear. So that's on 11th of December, this Wednesday at 7 p.m. If you are keen to attend, you can scan this QR code and register by tomorrow, the 10th of December. Okay, if you find the weekly market review helpful, do leave us a review on Google. And if you're wondering how you can join SIAS as a member, you can go to this website, sias.org.sg/membership. And as a SIAS member, you can access various online resources as well as investor education programs. Okay, so like Sunny mentioned earlier, we are in uncharted territory. That is really because we have seen the S&P 500 reaching new highs, now close to the 6,100 level, close at 6,090 points with a 1% gain in the past week. As we can see here, the gains were led mainly by tech stocks, with the Nasdaq up by 3.3%. Okay, STI in Singapore also did very well, now at 3,796 points. In fact, at some point last week, it exceeded the 3,800 level. So I think that is something that we have not seen for a very long time. Okay, so the key economic data that came out last week was the US labor market data. We have the US non-farm payroll. And what we see here would be actually close to 225,000 jobs that were created, and that exceeded the market expectations. What we also see here is that it has rebounded strongly from the month of October, where the jobs were impacted by some of the climate issues in the US. So as a result, that would actually make the US economy seems to be on a very strong footing. So with this latest labor data that's come out, I think what investors are expecting is that the US is probably on track for another rate cut in December. Okay, so that is what we see here following the release of the data. The US bond yields have actually fallen further. This is the 10-year bond yield, and what we see is that it has actually declined further following the release of the data. Okay, so this is the latest expectations around the interest rate cuts following the US labor data. I refreshed this on Sunday, and what this is telling us is that for the upcoming meeting on 18th of December, investors are now having a 86% probability that we'll see a rate cut then. Okay, so fairly confident of a upcoming rate cut in December. And what I also noticed is that going into 2025, the expectations of a sharper rate cut have also increased. Now we are potentially seeing 3 rate cuts in 2025, one in March, one in June, and potentially one more in December next year. Okay, so I think overall, given the strength of the US economy, given that investors are also great in terms of expectations on rate cuts. All of that is actually driving greater investor sentiment because we are in a fairly good foundation where interest rates are coming down, and then at the same time, the US economy is actually fairly healthy. Okay, so how has that translated to the Singapore market? We saw the STI reaching 3,800 points at some point last week. And then quite a number of stocks that did fairly well, particularly within the industrial sector. So Yangzijiang Shipbuilding up by close to 12%, Sembcorp Industry 6.9%, Seatrium up by 4.2%. Okay, in terms of top losers here, we see a few REITs, CICT, CapitaLand, Ascendas REIT, Maple Street Industrial Trust, and then we also have DFI Retail Group with a loss of 5.9%. So two stocks that I wanted to talk a bit more today. The first is Yangzijiang Shipbuilding, given that we saw the sharp rise in the share price in the past week. Okay, before that, just a quick recap of the REITs as well. We saw a number of REITs that had fairly strong gains in the past week, including Fraser's Hospitality Trust, Acrophyte Hospitality Trust, both up more than 15%. Okay, I'll talk a bit more about Suntec REIT later as well, given the announcement of the cash offer. Okay, first, Yangzijiang Shipbuilding, stock with fairly volatile share price over the past few weeks. It corrected down to about the 240 levels, but it's now rebounded back to $2.70. Okay, as I was doing my recap for 2024, Yangzijiang Shipbuilding is also one of the best performing stocks in the STI this year. Okay, so what the company announced last week will be more than $2 billion worth of orders. This will continue the very strong order momentum that we have seen for Yangzijiang Shipbuilding so far this year. As of 7 November 2024, it was already at 11.64 billion worth of new orders. And with the new orders that were announced last week, that will bring the total new order wins for 2024 to above $14 billion. Okay, so that is way above the company's target for this year, which is at 4.5 billion. And if you were to look at how much orders that it has won in the past few years, again with 14 billion of orders in 2024, that would actually be way ahead of what it did in the previous years. In fact, in 2020, it was just at about 2 billion of orders, and the 14 billion of orders this year would be what it achieved in 2021 and 2023 combined. Okay, so what we see here is that the order book, which is how much orders in total that it has on hand, that will be progressively recognized as revenue over the next few years, would have gone up as of, again, November 2024, it was at 22 billion. And with the new orders that were announced, this order book value would have gone up further, and that gives it the revenue visibility over the next few years. Okay, in case you're wondering what is driving the very strong order momentum for Yangzijiang, a big part of it will be driven by oil tankers as well as gas carriers, where based on the market expectations, that is expected to continue growing through to 2029. Okay, so for oil tankers, part of the driver for the demand is the fleet renewal. As some of the older vessels get removed, there's a need to actually renew the fleet. Okay, then for the gas carriers, we see very strong demand because of the increasing shale gas production, as well as the move towards more cleaner energy sources. Okay, so in terms of Yangzijiang Shipbuilding, one thing that I noticed is that the dividends have been fairly stable over the years, and based on the market expectations, the dividend for 2024 is expected to increase to 7 cents from 5 cents last year. But given that the share price has moved up a lot, with the expected 7 cents dividend, the dividend yield is actually below 3%, and that is actually below the historical average dividend yield of Yangzijiang Shipbuilding. Okay, so next I'll talk about Suntec REIT. The announcement was for a cash offer at $1.16. And what we see is that following the announcement of the cash offer, Suntec REIT share price actually bounced to $1.23 as of the market close on Friday. Okay, so in case you're wondering what is the rationale for the cash offer, we have this shareholder, Gordon Tang, and related parties, including his wife, Celine Tang. So in terms of the total number of shares held within Gordon Tang as well as interested parties, it exceeded 30% following the further purchase of the shares in the open market last week. And based on the rules in Singapore, following the exceeding of 30% shareholding, there is a need to then come up with this offer. Okay, so the offer was made at $1.16. And if you to look at how does that compare to the average price of Suntec REIT over the past month, the average price was at about $1.15. So that will be in line with the average price. And compared to the NAV per unit of Suntec REIT, it would represent a fairly sizable discount. Okay, so currently Suntec REIT is trading at about 0.6 times price to book, which is in line with the historical average. Okay, the other thing to take note of is, remember when I was talking about the recent MAS regulatory change in terms of a standard leverage limit. I mentioned that one of the things to keep a lookout for would be REITs with an interest coverage ratio that is between 1.5 times to 2.5 times, and how that will give them more headroom with the regulatory change. So Suntec REIT will be one of them, the interest coverage ratio at 1.9 times. So that is also something that we can see how the REIT would be able to make use of this regulatory change to be able to potentially make more acquisitions or have more headroom in terms of what it is able to do with its gearing. Okay, so now that we're in December, a quieter month, we just have the preferential offering close for Keppel DC REIT that is coming up on Tuesday, the 10th of December. And in terms of the economic data, the US Consumer Price Index data coming out on 11th of December. Okay, so with that, I'll hand over to Sunny, who will share with us the technical analysis.
Okay, thanks, Gerald, for the updates on some of the movement on the Singapore counter. Yangzijiang is definitely performing very well. And there are also some developments on the REIT side. I think unit holders should keep a lookout for on further news that were developed from those REITs that were covered. Okay, so let me cover the Singapore market first this morning. Okay, so this morning we see that on the early trading, we have dipped below the 3,800 points. We are down just 0.13% or just 4 or 5 points. We can see that last week as a whole, the STI performed quite well. In the first 4 days of trading, Monday to Thursday, it was up about 2.2%. And then we saw a dip of about 0.69% on Friday. That brings the total gain for last week on the STI to about 1.52%. So the dip on Friday, I would attribute that to because we have the big data coming out, the non-farm payroll data before on Friday night. So it was more of a careful profit taking over there on the Singapore investor side or the Singapore market side. And today, with the market flat, we are now looking forward to this week CPI data, which will give us more insight on where the inflation level is likely going to hit. So I think things are still pretty elevated or pretty optimistic now at the level of the STI right now. We are now starting to see a bit of a pullback. The RSI indicator has went into the overbought territory last Friday, at the 74 points level, and we have now dipped back to the 64 points level. So we are now going towards the first support level, which is the 20-day moving average at 3,750 points, with the lower bound of the Bollinger Band at 3,687 points being the next support level, which I think will find confluence with the blue color line, which is the 50 days exponential moving average, now at 3,671 points. So 3,007 points would likely be the next support level that we are looking at on the STI level. And of course, we are now very close to the 3,900 level, which is what we saw in October 2007. Okay, so I think this rally is really at the top. I have said that last week as well, as you can see over here. The index sort of peaked, and then after that went back to the 20 days moving average, and then now we have a big jump up again. So we are into uncharted territory on most of the indices, and the next milestone that we're looking at for the STI will be the 3,900 point level, with the 3,008 as the pivot and the 3,007 as the support. So these are general levels to guide your investment or your trades into the Singapore markets. Okay, next, let's me move to the US market. So among the three US indices, the Dow Jones Index was the one that has a negative performance on Friday, or for the week. Okay, so you can see that the Dow Jones Index actually pulled back on Thursday and Friday as well. And after we touched the new all-time high in earlier part of the week, we have now pulled back slightly. So the Dow Jones Index has been trending on the top side of the RSI indicator, which means the 70-point mark, which is also the indicator. Once it exceeds that, it would indicate that the Dow Jones Index is going into the overbought level, and that could mean a short-term retracement is it would likely occur. So the MACD indicator, as you can see, the MACD also converged towards the signal line already, and we still have a slight positive reading on the MACD histogram. But once we have a negative reading, that could confirm a technical pullback, I would say. But based on the latest data that we have, the non-farm payroll data, which in my view, is sort of a neutral kind of an announcement, because we do have a very strong job growth, 227,000, but the unemployment rate coming in at 4.2%, just 0.1% above the previous month data. That more or less give us a neutral perspective, and that is also why we are leaning towards another 25 basis point cut next week when the FOMC committee meets. Okay, so the Dow Jones Index, as per what I said last week, once it pulls back to the 20 days moving average, I think that would be the level that we should start to accumulate on the Dow Jones Index, given the very strong rally that we are seeing, given the strong economic data that we are still seeing. So this rally is likely going to have some legs and continue into next year. So the 20 days moving average now at 44,236 points will be the first level of support, just like what happened in the mid of November. You can actually find support at the 20 days moving average, with the next support level now at the 50 days exponential moving average, which is around the 43,300 points level. And I think that is some sort of a far away level to look at for the Dow Jones Index to reach, because it also has the 44,000 level, which is the psychological level that will also provide the support for the Dow Jones Index. So for the Dow Jones Index, people who are getting into the bigger names on the US market, I think you can look at the 44,000 handle to accumulate Dow Jones Index going forward into 2025. Okay, next we have a new all-time high on the S&P 500, and that is at the 6,099 points level. Okay, we are just 1 point short of the 6,100 points level, and I have no doubt that in the next few weeks or few months, we could actually test that level. Okay, so compared to the Dow Jones Index, the S&P 500 hasn't really shown any sign of a pullback yet. You can see that the candlestick movement on the S&P 500 index is trending very closely to the upper bound of the Bollinger Band, which is the resistance level also. That is at 6,113 points. So that's the next resistance level that we are looking out for, because above this, we don't have any previous records to look at to reference where are the sellers. On the support level, previously we are talking about the 50 days moving average. I think I'm still sticking to the 50 days moving average, which is the blue line, and it is now hovering around the 5,879 points level, very close to the lower bound of Bollinger Band at 5,868 points. So the 6,000 handle would also be a key support level for the S&P 500 as a psychological level, and anything below that towards the 5,900 level would be the accumulation point for the S&P 500 index. the MACD histogram is still showing a trajectory of a upwards direction. So that means that this rally on the S&P 500 is likely going to continue upwards. And as of now, the MACD is not showing signs of converging or showing any signs of a retracement yet. Okay, lastly, let's move to the tech heavy index, which was the best performer among the three US indices. You can see that we have a new all-time high at 19,863 points. We closed last Friday trading session very close to the high at 19,859 points. So the support level, as I would always be very cautious when trading into the Nasdaq Composite Index, because it is more volatile than the other two US indices and focus on the growth and tech stocks. Okay, so looking at the charts right now, I'm still waiting for a pullback. The 20 days moving average, the first support level is at the 19,220 points level, and that is also the Bollinger Band basis. And the next support level would come in on the 50 days moving average at 18,762 points, with the lower bound of the Bollinger Band around the 18,600 points level. So where should we get in on the Nasdaq Composite Index? Same thing. I think if we are going for the round numbers. 19,000 will definitely be the first support level that we are looking at, with the 20 days moving average just 200 points above that. So the 19,000, 19,200 levels could be the first accumulation level on the Nasdaq Composite Index. A safer option would be somewhere just slightly below the 19,000 handle, close to the 18,800 or 700 level, which will be closer to the 50 days moving average. Now, compared to the other two US indices, the MACD on the Nasdaq Composite Index is still showing very strong signs of further upward momentum accelerating. Okay, and the RSI, although it has reached the 70-point overbought level, now reading at 72, you can see we can reference this year highs on the RSI. It actually reached a high of 80 points quite a few times already. So if you are going to take that as a reference, then definitely the RSI do still have some headroom to move up to the 80-point level before we see some kind of a retracement or pullback on the Nasdaq Composite Index. But overall, as a whole, market is looking very positive, with supported by good macroeconomic data, and that also coincides with the good earnings results, I would say, from the latest earnings seasons from the US companies. And this could be the bedrock to propel the US markets forward as well, and that could have a positive effect on the Singapore markets. Okay, and these are the sharing that I have today. Anything else to add, Gerald? Will you still be joining our WMR next week, or will you be taking a holiday?
Yes, I will probably still be around for the weekly market review. So I will look forward to providing more updates on the market. And I guess the inflation data, like I mentioned earlier, is definitely something that we'll keep a very close lookout for, because that's the last major economic data point before we go into the Federal Reserve meeting next week.
Yes, so if you have any things that you want to discuss with me and Gerald on the capital markets, do remember to join us on this Wednesday, right? This Wednesday
Yes, that's right.
SIAS
This Wednesday.
session. Yeah, and then that's where you can put the questions to us on a Zoom session, and we'll try our best to answer those investment questions for you. Okay, so you can look out for the sign up link on our SIAS website. And these are the time that we have for this week weekly market review. So everyone have a good trading week, and we'll see you again next week on the next weekly market review. Goodbye.